In today's Property Insider Chat, Dr. Andrew Wilson and I discuss the current state of the rental markets around Australia, and we currently are in a rental crisis with plummeting vacancy rates, skyrocketing rents, and long queues of people whenever there's a property open for inspection. What's happening in your state? What's ahead for this year? That's what we're going to discuss. But if you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. It's common at this time of the year to look back and put labels on the previous year in property. I think we're going to see 2023 as the year when our property markets reset and we experienced double-digit property price growth in many locations, and that made up much of the losses of 2022. Of course, many sub-markets hit new property value highs. But I think 2023 is also going to be seen as the year of the rental crisis, when vacancy rates plummeted, rents skyrocketed, and the media was full of stories of long queues lining up for rental properties, more people living in caravans and tents and being homeless. So to get a handle on what's happening in our rental markets at present, I'm looking forward to my chat with Dr. Andrew Wilson, Australia's leading housing economist, to get his latest My Housing Market rental update. Hi, Andrew.
Yeah, good day, Michael. I think we will see the sale market reset this year, but I'm not sure we're going to get any good news from the tenants' perspective for our rental markets, because it's still a horror story out there. Just from my own personal perspective, the other day, I think it was the 2nd or 3rd of the new year, month of January, I noticed a large crowd congregating outside a block of units near where I was staying in Hawthorn in Melbourne. And I thought, oh, what's this? Is there an auction going on? And of course, it was people queuing up for an apartment. And I think that said it all, that just on the 2nd or 3rd day of the year, the big queues of prospective tenants looking at what would have been just a year ago, something that wasn't overly popular. And our latest rent report is validating once more that 2023 ended as it started, with very low vacancies and rents rising.
Well, it looks like there's not going to be much of a change over the year. Sure, we're not going to get as many migrants and maybe not as many students coming in, but we're just not building enough apartments. So let's have a look at what's currently happening in the market, and then we can have a bit of a talk about what we think is going to be ahead.
Well, as I mentioned, Michael, December 2023 finished as the year began, with higher rents and lower vacancies. We saw almost across the board in terms of house rents increases. Every capital city, with the exception of Sydney and Darwin, reported higher house rents over the month compared to the previous month. Canberra was flat. The underperformers were Sydney, down 1.7%, but that almost was just an adjustment from what was a very strong rise the previous month. And we saw Darwin, which has a volatile housing market because of its size and seasonality. Its house rents were down by 2.1%. But leading the charge over December was Adelaide, where house rents increased by 4.3% over the month. Melbourne and Perth up 3.5%, each up 3.5% over the month. Hobart up 1.8%. And Brisbane up 1.7%. So some fairly steep rises there, Michael, over December. No joy for tenants in terms of the current trend. And when we look at the annual trend, it's the same old story. Sydney rents up by nearly 14% over the year. Melbourne up 18%. Perth has had the strongest result in terms of higher house rents over 2023, up by 18.2%, and Adelaide up 14.3%. Some of the smaller markets have had better news over the year for house tenants, Michael, with Hobart down 1.3%, Darwin down 2.1%, and Canberra, where house rents have fallen by 4.2% over 2023.
Andrew, when you look at the big markets, there are sub-markets within those, even amongst the houses, and even more so when we get into the units in a short while. So there are some areas, some locations that are strongly outperforming, and I guess others under. That's how you get the averages, isn't it?
Well, that's right, Michael. But I would suggest that there's not really any markets that don't have queues of tenants looking at vacant properties. It's just that what does have the lowest level of demand tends to suck in more prospective tenants from those areas where there are long queues of prospective renters. Vacancy rates We saw a little bit of an upswing in vacancy rates over November, Michael, which we discussed. Maybe some result there of not more supply, but of changing demand patterns. We mentioned perhaps people who are struggling to get into the rental market are waiting longer, staying at home longer, or making different choices in terms of their property decisions, maybe going to regional areas. But that changed significantly over December. Vacancy rates were down in every capital city market with the exception of Canberra. This is for houses we're speaking about, with the exception of Canberra where vacancy rates were flat. And Canberra has the highest vacancy rate, Michael, of all the capitals, 1%. So that's not really anything to cheer about if you're a tenant looking for a house in Canberra or a prospective tenant, 1% vacancy rate. But all the other vacancy rates are below 1%, with Sydney the highest at 0.8%. This is shocking results, really, to unprecedented results showing that we just have really no vacancies.
So just to explain to people, in general, a vacancy rate of around 2% is considered a neutral level where there's enough properties around for the tenants looking at the moment. And if it's below that, there's obviously a landlord's market. Tenants have to fight for properties and therefore rents move up. On the other hand, when vacancy rates rise above 2% and get closer to 3%, there's just too many vacant properties. Landlords have to lower their rents or wait longer to find a tenant. So with these very, very low vacancy rates, landlords have got a choice of tenants and no reason at all not to increase their rent to what we'd call market levels, not taking advantage of tenants. I mean, there's 7 million people in Australia who rent. Around a third of Australians always do. And it's not necessarily because they're poor, Andrew. It's often just their lifestyle and the way they choose and where they choose to live. But they're having a bit of a challenge at the moment, that population.
Well, I think it's more than a bit of a challenge, Michael. These are extraordinarily low numbers. There's no sign of them shifting. Once you get to these types of low positions, it's really beyond credibility to think that they're going to move upwards anytime soon. We're not going to get the levels of supply, we'll talk about that shortly, that are required, new supply. And the only thing that would impact these vacancy rates would be a significant economic downturn where people just didn't move, all their shifting prospects were on hold. And I'm not sure we're going to get anywhere near that sort of an outcome anytime soon. So this is really something that's here to stay, Michael. We've seen that for the past year. I think we've been discussing this for more than a year. And finally, we're seeing some action from policymakers. We'll discuss that shortly. But it's just now the big picture is that it's almost as tough to rent a property as it is to buy a property, Michael, going forward. But it certainly offers even more encouragement for those wanting to become homeowners that aren't already because of the terrible nature of the rental market.
Well, there's a bit of anecdotal evidence that that's happening, Andrew, speaking to people where, unfortunately, they're having difficulty renting a property. They say, I've got to spend $600-700 a week. I may as well put that in a mortgage and pay off my own home. And that's good for our housing markets.
Well, that's right, Michael. But this isn't peculiar to Australia either. We're seeing a number of similar advanced economies with this same problem. And we're talking about the US. Some major cities in the US are certainly experiencing higher rents, and that's impacting the inflation rate in the US as it is in Australia, and a number of Western European countries that really are a bit more about public housing provision rather than private sector provision. They're also having problems, which is sort of sitting back those ideologues that have been looking at those Western European housing markets as a model for Australia. That's got them scratching their heads because that's a failed model as well if we look at that imbalance between supply and demand. And there was really a similar result when we look at units.
A couple of years ago, we were flooded with apartments after a building boom, but more recently, you can't even find an apartment to rent.
No, there's no relief for tenants looking for a new property if they're deciding to choose what used to be, as you said, Michael, a more affordable, more available option of an apartment. We saw apartment rents increase, again, similar to houses in just about every capital city over December compared to November. Melbourne rents were flat, unit rents were flat, and Canberra rents, similar to houses, they were down by 2% over the month. But the top performer was again Adelaide. Unit rents up 4.4% over the month. Sydney up by 2.7%, following a fall the previous month, but certainly we now see Sydney, which they have been for a while, house and unit rents tracking each other, which shows that there's no real differentiation between the two. Certainly, we can't, on these numbers, look at the Sydney apartment market for rentals being more affordable than houses. We saw probably more marginal rises in the other capitals. Hobart was up 1.5%, Brisbane up 0.8%, and Darwin up 0.9%. Hobart was up 1.5%, but generally we're continuing to see upward pressure on rentals for apartments as we are with houses. And when we look at the annual figures, Michael, it's even worse for a tenant than houses, with Sydney rentals up by 25%, unit rentals over the year. Brisbane up 26%, Melbourne up 22%. Can you believe these numbers? Perth up 16% and Adelaide up 13%. And as it goes to your commentary previously, Michael, that a year or so ago, there were more choices as a result of the issues we had through COVID in the apartment market, particularly Melbourne and Sydney, and that's what's driven these rises over the past year. But vacancy rates, similar to houses, were down in every capital city, Michael, over December compared to November. A little bit higher than the apartment market, a little bit higher in terms of vacancy rates compared to houses, where we do have Darwin, Canberra, Sydney and Melbourne above 1%, Sydney tracking at 1%. But as you mentioned, Michael, anything below 2% is clearly a measure that's in favour of higher rents. We're well below, with the exception of Darwin at 1.9%, that 2% benchmark. But yes, vacancy rates fell across the board in capital city apartment markets over December. So no joy there. We're just basically repeating the same things we say every month, Michael, and I don't think we're going to see much of a change in the foreseeable future. And we could discuss the foreseeable future might even be of a longer term nature. This is now something I think is here to stay. And as I mentioned before, it's not something that Australia is suffering with alone. It's a global phenomenon in advanced economies, this undersupply of dwellings.
This unfortunate situation has led to a little bit of a kind of tall poppy syndrome, Andrew, that paints property investors as the villains of the Australian property dream. There are about 2.1 million Australians who've stepped up to provide 91% of the rental accommodation across the country, but has sort of become an us versus them dichotomy rather than to highlight the interdependence that the 7 million people who rent properties have. Each year, the Taxation Office releases data telling how many people own investment properties, and 92% own just one or two properties, and 72% of property investors earn 100,000 or less a year, Andrew. So they're not tycoons, they're our neighbours, they're your friends, they're your family. Interestingly, I also read that there's 107,000 investors under the age of 30, and meanwhile 40% of tenants are over the age of 45. In other words, the rents, the tenants and the rental providers are fundamental to each other's existence, and it's a shame that you've got to give 20%, 25% rental increases at the moment. But on the other hand, landlords, rental providers, as we now have to call them, over a decade haven't had rents keep up with inflation. So it's not a symptom of greed. It's just really market forces at the moment, Andrew.
Yeah, and look, it's part of this narrative that I guess we could say class envy that certain parts of the media love to jump on, you know, the haves and the have-nots. But the reality is, as you said, far from that. And I think governments are very wary now of jumping into that have and have-nots, us versus them type of class warfare commentary around the rental market, because whenever they've made actions based on that to change policy, they've been roundly condemned. I think it's the old story that hollow vessels make the loudest noises, and those loud noises condemning investors really are a negative in terms of solving the issue, because obviously we're not going to be able to rebuild at the rate that we require to get demand and supply in closer balance. We need to look at private sector investors and to get more of them, because that's the only way tenants are going to find any relief from rents and to be able to have more choices of properties. And governments will pay a heavy price at the polls, Michael, if they continue to listen to the sort of, as I said, hollow narratives around the view of investors, whereas investors, as you said, provide a very significant proportion of our housing. And the issues with policymakers that have really lurched from one mistake to the next, and I mean those tightening of lending conditions to investors. Look at New Zealand. That was a disaster when they did that. Their government was roundly kicked out at the last election, and we followed them with the same sort of policies designed to reduce investor activity. And look where we've ended up, Michael. So if you want to sort of follow that type of scenario, don't be woe is me if you have to pay higher rent because there are actually fewer private sector investors.
Beware of unintended consequences. I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options? We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, it's not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Now, I know we've discussed it before, Andrew, but there are thousands of new viewers to this video every week. And in our previous Property Insider chats, we've talked a bit about the recent government initiatives designed to increase rental supply, and in some ways even talking about providing affordable accommodation. Not that I'm really sure what that means. So what is your thoughts on that?
Well, look, the governments are now under pressure. Significant political ramifications in countries that, particularly in Western Europe, that are suffering from this lack of new dwellings or lack of dwelling supply and are trying to alleviate it. It's too late because we're still paying the price for those ideological claptrap policies of recent years, particularly aimed at private sector investors. And look, those policies, we've seen that the government is going to increase the levy on international developers, builders, and use the money they get from that to fund build to rent or rent to build initiatives. This is just cloud cuckoo land stuff, in my opinion, bit of a thought bubble where there is an election offing. So I guess governments have got to be seen to do something. But what we're doing is taking away the incentive for a private sector or market driven development profile and replacing it with this, who knows what it is, these rent to build type of developments, which of course developers are rubbing their hands together with glee because they get significant government support for these particular projects. But at the end of the day, we're talking at best tens of thousands of new rental properties coming into the market when we are clearly hundreds and hundreds and hundreds of thousands of properties short in terms of our requirements. So it sort of sounds good, but when you look at it in some depth, it's just a negligible political statement, in my opinion. And the other point is, Michael, how long is it going to take to get these projects to the point where you can put a key in the door? The answer to that is years and years. But as I said, these are short-term government initiatives designed to ameliorate what is rising anger, I would suggest, in the electorate about the difficulty in finding suitable accommodation. Now, the other thing was, Michael, there are also policy positions by the government designed to reduce migration, particularly short-term migration. That's those with temporary visas, students and tourists, particularly students, because they're blaming that as a key driver of demand or the imbalance in the rental market. I think that that's a part of the story, but I don't think it's a significant part of the story. And the point to the higher numbers of temporary visas that we have, particularly from students, is we're getting a lot of our normal inflow, but we're not getting the outflow. And the problem with that is that we're going to reduce the economic capacity of higher education facilities that rely on that student market. And if we're providing disincentives for students to come to Australian higher education environments, then they'll just go somewhere else. And it's a very competitive field. We compete with particularly Canada in this market. And I'm not sure those higher education entities would be happy about Australia putting up the "don't come here yet" sign for its student market. So as I said, it's just a bit of a thought bubble.
I agree with you. Our economy depends upon a number of things. We dig things out of the ground and sell them. We grow things in the ground and sell them to our neighbours as well. And we provide education and basically sell education services. And that's allowed our economy to grow, us to become a more knowledge-based economy. So it seems like a short-term solution rather than look at the long-term consequences. But the government does that a bit, doesn't it?
Well, it does, and we're moving into the electoral cycle now, so you can expect more of this. But I would suggest we were not going to see any sign of relief from the problems we have in the rental market. But I guess government's just saying, well, we're doing something, it'll work, trust us. But all these initiatives are only going to be effective, if they ever are, over the longer term. And as I said, I think to some degree we're cutting off our nose to spite our face by turning away international students, which the only reason we have high numbers in aggregate now is that we don't have the outfall of students because we haven't had any students for a couple of years because of COVID. So we're not seeing those that have come to Australia, got their degrees and then gone back home again. So that'll take some time for those coming in over the past year to be doing that. And then we'll get back to a normal position in terms of net migration or net temporary visas.
Well, some interesting data is going to start coming out over the next little while. So I look forward to our regular weekly Property Insider chats to talk about the various aspects of our housing market. Thanks for giving us an update on the rental markets, Andrew.
Yeah, thanks very much, Michael.